Oh, oh, baby, needing you has proven to be my greatest dream. Yeah. I'm so tired, so tired, so tired. Sometimes I have to go in the action. I'm so tired, so tired, when our people start to play your disco disco, no more winger rock, cause I'm watching it to you. Good catch. Rhythm and blues, musical this you could never refuse. Kill about it. Murder shock. Stop your running around. Right. It's time to straighten right out. Stop your running around. Making trouble every day. Rudy. You know. A message to you, Rudy. How you mean? A message to you. Yeah. Exclusively. Tell about it. Rude boy. You got to stop and change. You got to want to step. I'm not gonna get things running yourself to a wreck. But I'm saying change your flavor and straighten your behavior. Don't be no trouble on the mischief maker. You go like favor. Growing older each day. Want to think of the future. How you mean? Or you might end up in jail. Right. And you will suffer. You know? Rudy. Yeah. A message to you, Rudy. A message to you. Hear what I'm saying? Rude boy, there is a better way, a better day with the children we play. Yeah, you know. Think twice before you make a choice, or you would rather roll your dice. Be nice and listen to my musical advice. Come in, Mr. Living Star. Murder style. Stop your running around. It's time to straighten right out. Stop your running around. Making trouble every day. Rudy. A message to you, Rudy. You know, a message to you. Rudy, you gotta change your mind. Show yourself off the line. Rudy, you got to watch how you move. You got to be young, you be like you. Tell about it. Choose wisely, or else you will suffer, and you will end up down the gutter. Then who's gonna be the trendsetter? A message to you, Rudy. A message to you, Rudy. First choice, I'll tell you. A message to you, Rudy. Dedicated to our boys. A message to you, Rudy. A message to you.
All right. Welcome to Alex's Boom Boom Room, everyone.
You said happy hour, right?
Happy hour. Where's your drink, Eileen? All right, hold on. Let me put this music down. I'm gonna mute some people. Is everybody unmuted right now?
Yes.
How are you, Cassidy?
I'm good. How are you doing?
Good. Hold on. Let me put these earphones on.
Hi, everyone.
Check. All right, hold on. All right, sounds good. How's everyone doing this afternoon, evening?
Well, thank you.
All right, hold on.
Doing good.
I am going to have to take this off.
Can you hear me okay? I have this little cheapy microphone thing.
I can hear you good.
Great, thanks.
Check. Is everyone there? Can you hear me?
Yep.
I can't hear. There we go. All right. So we got some peeps on here. We got Cassidy. She's a friend of mine. She's a nurse with Fontana Kaiser, right?
Yes.
Bless your heart.
Oh, thank you.
You got the grinding every day, saving lives. Come on.
Yes.
Kaiser, yes.
Thank you.
Elaine, tell us a little about yourself.
Me?
Yeah.
Oh,
I go to church with this lovely young lady right here. I see her at the 24-hour fitness all the time.
not anymore.
Unfortunately,
Right?
you're not there, so you know.
I'm a retired veterinarian,
That's right.
Oh,
and I attend Genesis, where I know Maurizio from, sort of, kind of, and Alex.
Yeah. And then we have a good friend of mine over here, Sonia Torres, right here. She, how you doing, Sonia?
Good, I'm doing great. It's beautiful outside today.
It's very nice.
It's a good day. I see a few of you outside.
Tell us a little bit about yourself, Sonia.
My name is Sonia. I am 31-year-old, and I am so excited to just learn so much about like housing and real estate. I work at Chaffey College with students. So if anyone's interested in enrolling, I'm your person to hit
I
up.
need to talk to you, Sonia.
Awesome.
I need to talk to you.
We will connect.
Okay.
So
You're
I
my
am
new
on
best friend, Sonia.
Yes, we will get you in. So again, thank you all for joining. Alex, this is awesome. I'm excited.
Thanks. So this is technically, I've never done well, I've done Zoom meetings, but not with, with work or, talking like this. So I'm going to do my best to keep everybody unmuted for now. And if you have a question, use the little hand thing. Mauricio, unmute yourself. Mauricio, you're up next, brother. So Mauricio is a good friend of mine. Mauricio, tell us about yourself.
Hey everybody, what's up, Alex? Sorry, I see some familiar faces and some new ones. Hello, everyone. I've known Alex. Hi, Eileen. I've known Alex. Geez, Alex like raised me like a pup. I met Alex in what was it, 2007, 2008. I was a realtor with Remax Champions with Alex. And then from there, I went on to insurance. I did that for about 12 years. And now I'm in medical management. And and then now going back to school to just perfect on my craft in business management.
Awesome. And then down here we have the Christina Colbert, soon to be Christina Ortiz. This is my niece, everyone, right here.
Oh my gosh.
So,
Hi guys. I'm Christina. Christina, I'm Alex's nephew's fiance. We just recently got engaged.
Oh, congratulations.
Congratulations.
Thank you. We live out here in Texas. So originally we were in California, but we've been in Texas for about 3 years now. I work for Geico, so I'm in insurance. And I'm really excited that Alex is doing this Zoom. It's what better to learn information
turn your
than
thing.
what's that? Can you guys hear me?
Yeah.
Yes.
Oh, okay. Sorry, I thought somebody said something. But I'm excited for Alex's meeting, and I am here to support him. And I think he has a lot of good information to spread. So thanks, Alex.
All right. And then we have a Lauren on there. Lauren, are you there? I don't know which Lauren this is, actually.
Hey, Lauren Scotty. Here.
Oh, snap. Lauren Scotty's on the phone. Lauren Scotty is also another nurse here at San Antonio Community Hospital, yes?
Yes, yes.
Ooh, she's out
Lauren,
there.
thank you for all you do.
Yes.
Thanks, anytime.
Are you there with your family, or is you right
Yeah, I'm
solo?
here with Christian and my parents.
What's up, everyone?
So I don't have my camera on.
Hey, Alex.
No worries. What's up, everybody? So, and then last but not least, I mean, I'll probably mute everybody here, and then we can do like the whole question thing, or you can mute yourself. I'll allow you guys to mute yourself. And then last but not least, a gentleman that you've probably seen videos with me on YouTube, on Instagram. His name Gordon Cooper. Gordon, say what's up, man. G Cooper.
Hey,
That's my boy right there.
hello everybody. Glad you could all get on. This is for actually a fun way to meet people without even having to travel far.
Yeah, definitely. It really is. So, my Gordon, how long you been in the business?
I've been in the lending business since 1993.
93. So he's got a lot of experience. I met him when I came back into real estate. So a lot of you know that I took a break after 08 in real estate. I'm not sure if all of you know, but I was I was a realtor from 04 to 08. I actually started in real estate in 2001. So fresh out of high school, I had a mentor from church who was asked me one day. He said, "Hey, you need a summer job?" I said, "Sure, let's do this." I was working part-time at UPS, and he said, "Well, come over 3 times a week." I said, "Sure, whatever." So I was out taking pictures of houses, putting up the lock boxes and things like that. Really didn't know what I was doing. And then as I kept working, he hired me full time, and I got on board, and what do you call it? I became a realtor. I learned that you can actually buy your own home, because I didn't really know that you could do that. So the first time that that we purchased a home, I was about 19 or 18 years old with my sis. And we have that whole experience where, we try to find the right house. It took, 13 offers. We got into escrow, and it fell out of escrow. And if you have questions on what escrow, I'll explain that later. And then we finally, one day I was putting up a lockbox, and I saw the house, and I called my sister, said, "We need to put an offer on this house." So we bought our first house. So we have that experience of having interest rate, at least at that time, it was about 8%, 6%, at the time when we bought our first house. And at that time, everybody in the office like, "Oh my God, they're giving away free money. It's your loan is at 6%, it's at 8%," or whatever it was at the time. Everybody in the office was like going wild because because it felt like free money. Obviously, years later, now we know that people are getting into home loans at 3.5, 3.1, whatever. Gordon's the guy to talk to on that one. He's the one that handles all that biz. But that's basically my experience. My sister and I, we bought our first home back then. We sold that house, bought the current house that we're living in right now, and just wanted to share that information with all my friends and family, people I know, because I think I'd love for my friends and family to see homes more than just a place to, just to lay your head at night. It's an investment. It's a retirement plan, or AKA it's an inheritance for your children. Unfortunately at 19, my mom did pass, and she left us some cheap jewelry and a couple $100 in cash. Bless her heart. She left a bunch of other things that you can't take away. But I think that if we probably would have had a house, she would have left a nice little inheritance for my sister and me, and possibly my brother, So that's my story in real estate and how I got started. And today, I just want to have that open conversation. What's up, Sam? Sam Scotty. He's a friend, mentor, pastor, everything on the line over here. So hi, Sam, if you're there. Can you unmute you? Hold on, let's see. Sam.
Hello.
All right, that's Sam, everybody. And then we have Sandy. Sandy's on the line. She's all. Oh, what the heck?
No, I didn't.
Right. So basically, today I was looking at all the notes that I had and everything that I've prepped. I don't know if you guys saw the stuff that I've been putting online. Try to keep up to date what's going on with the market, with the economy, especially with unemployment and things like that. And people have a lot of questions. I figured this is just a good way to just answer questions. In fact, Sonia Torres, she inspired me maybe like a week or so ago. We had a Zoom meeting and we ended up talking for hours about real estate and what that means. And then as the weeks have been going on, I noticed a lot of people have been having questions in regards to real estate and in regards to what the market is doing, whether they're buying or selling it. So I guess with that, I mean, I don't want to make this just like, because I'll lecture. I'll talk all night long. I could do that. You guys know me. Woo! I think I might love the sound of my voice. But does anybody does anybody want to start off with any questions right now, or have any questions in regards to real estate or anything that's going on right now that I might be able to answer before we get on?
And just to kind of help Alex out too, if you want to share, like, what was your purpose of like coming to this meeting? What is it that you expect? As Alex did mention, this is his first time to kind of collect everyone and see what it is that his friends and family actually are informed about. Alex did share with me every time we've had conversations, they've been those educated, cool, how do we help students? How do we help people conversations? And you kind of automatically just expect that someone knows what escrow meant or what foreclosure meant or what, leaving a will, all these different things literally was just a conversation with Alex.
Oh, it muted on accident.
Oh,
there you go.
Sorry. I personally myself don't own a home. It is one of my goals. I don't have good credit, so that's something that I need to work on. So it's all these different steps in terms of perhaps you're not looking for a home now, but what is it that I need to do? And what places and positions do I need to put myself in so that in 5 years I could hit Alex up and say, hey, Alex, I'm ready. Let's go. So it's more of that conversation here. So just, I guess by a raise of hands, how many of you own your own home? Oh, awesome. That's good to know. People on the phone, I'm not sure if you know, Alex, but okay, see, someone owns their own home. Cool. So see, there's us, right? Us is the market that Alex in 5 years will be able to help. And I'm looking forward to being able to say, hey, Christina Ortiz, guess what? I'm buying my house. And you're like, oh, me too. Guess what? Like, come on over. We're having, whatever it is. And Cassidy, what? You finished school and you bought your own home? Like, those things is what is we can continue this weekly, right? Where are you at? And we hold each other accountable as a team. So in 5 years, Alex is ready to buy a big home because we're all, we're all helping contribute to that. So again, just being very, very transparent. If you're not sure what it takes to buy a home, I didn't. Alex, kind of explained, I still don't know. I have to go back to my notes where I'm like, okay, so I have to have these forms, I have to file taxes, all these different things is what's important, because even though you're not ready right now, you will be one day. And so why not start today planning for that future?
Sonia, that was amazing. I think that maybe you need to take my position because that was.
No, really, it was just, it came down to that. My mom purchased the home that we currently live in. And for her, is it Eileen? Is that the nurse from Kaiser? Am I pronouncing that correctly? Yeah, for example, she owns her own home, right? And it's, what is she doing with her home? Is she leaving it off to someone to then be able to expand on it? And it's those things. I, again, myself do not own my own home. I don't have children, but my mom's, going to be able to leave this inheritance for me to be able to leave to my children and, continue on where we may not be the ones who get to, live the lavish life, but someone down the line will.
But you will also get a property tax break by having it go down through your family.
Oh, what is property tax?
You get the luxury of paying that once or twice a year.
Yeah.
But you can, if you get it from a parent or grandparent, then you get to keep their, hopefully, property, Prop 13 lower taxes.
Yeah.
Right, Alex?
That is awesome. Yeah. You grandfather it in. Is that kind of like how it?
Yes.
Gordon, do you want to say anything about that?
Yeah, regarding the property tax where you transfer from parent to a sibling, or it could be even a grandparent to a grandchild. So yeah, you're able, if you're talking about inheritance, you could pass down the current property tax. Example is if your parents' property tax could be, I'm gonna say $3,000, which sounds like a lot, but if you go buy a brand new house, their same house, which could be worth a lot more than when they bought, the new property tax could be $8,000 a year. So that property tax, if you follow the rule, there's two propositions. I don't know exactly the number, but there's propositions that you do have to follow the rule and, you know, fill out some forms, and you'll get, for example, I had a customer I helped, and they ended up getting the property tax from a parents who had the house for over 30 years. Their property tax is $83 a month, able to transfer it. So that's a benefit that, you know, as you talk about inheritance, passing it down, that's a nice one, a big benefit, right?
Question, Gordon, when you refinance a home, does your property tax change at all?
No, your property tax will only change if you change title and ownership. So technically, if you were to buy a house and you add your brother to it, okay, that could trigger a reassessment. So you do have to be careful how you just start transferring property back and forth. I see it done a lot. So
yeah, so in like those situations where, you know, I may not have the credit, but you know, Alex is willing to buy the home and, you know, later on, you know, sign it off to my name, that property tax would change because it wouldn't be at the rate that he purchased the home in.
That's correct. Even if you had a side arrangement, the government wants their money, property tax.
Uncle Sam.
Wow. Okay. That's good to know. I know a few people who, you know, we have that mindset of later changing the name to someone else, but.
Yeah, but I want to clarify the property tax. I've always, like, income tax, property tax, sales tax, you know, this tax, that tax. One of the things you have to recognize, I think, about property tax is you do have ownership of something. So that's something that you get to write off, and so you have something that's increasing in value. So I mean, at least it's a tax where you're in a winning situation versus income tax. Boo! Nobody likes, you know, you work hard and Uncle Sam gets some of your money. You know, that's and you work harder and you make more money. Uncle Sam gets more money. Boo! But property tax, at least your house goes up in value. Those that are homeowners see that how that can help them in their income tax too.
So question to the group, the home you currently live in, if your parents own it, raise your hand. Okay. So Cassidy, that's a good conversation to have with your parents. Right? What's happening to the house when you're gone?
Come on. Hey, everyone. Yeah. We're going to have a talk.
Yeah. And you know, Alex and I talked about that, you know, talking about, well, how do you bring up, you know, they're going to not be here one day, right? You know, it's a sad topic, but in terms of just thinking and financially planning, you know, hey, what would you want to happen? And, you know, this is some information that I learned that you can still help me out even when you know, you're not here, and you could do this. So that's awesome. Thank you, Gordon, for sharing that.
Yeah.
You're welcome. And so the other thing that's important is, I don't know, who is in this financial piece of how do you build your wealth. A house is one way of building your wealth. And if you don't own a house, I suggest, and I think everybody should own at least one piece of real estate. Some kind of and if not more. But if you are going to own a house, whatever, you know, I think you should always think of other ways of creating wealth. And but you have to live somewhere, right? I mean, everybody agrees you have to live somewhere. And it's nice, as a real estate agent told me once, and you all maybe agree, it's nice to be able to live somewhere where you can decide if you want a dog. You don't have to ask somebody if you can have a dog, right? And that's, and that's what apartments or being a renter, you have to give up something in that regard.
We have a question, Gordon, from Sam. It says here, I believe when you get your house appraised, you pay on the new appraisal rate. I don't think that's.
Are we talking about like on a refinance?
Yeah, Sam, what are you talking about? Refinancing or just getting an appraisal? Is he there? He says here, I believe when you get your house appraised, you pay on the appraisal rate. Hey,
Sorry, I got cut off. Yeah, when we refinanced our house, we had to pay property tax on the new appraisal. And so that's something to keep in mind. If you are going to refinance, it will affect your property tax if there's a large jump in the value of your home.
Sam, I have to, that isn't, unless you change title and on that and maybe add somebody to help you get that loan, it does not trigger a reassessment.
Yeah.
If you bought it for 200,000 and it appraises for 600,000, they're not, because of, I heard somebody mention a Proposition 13, it's not supposed to trigger a reassessment.
Now, what about if you, what if you're refinancing and then pulling more money out? Will that trigger reassessment in terms of your property tax?
And what?
Let's say you refinance and then you pull money out of that loan.
No, it's still considered a non-transfer of title.
How about a room addition?
Well, yes. Now you're talking the city. Once you complete that room addition,
you're adding square
you're supposed to turn that into the county and then tell them how much you paid, and then they do a reassessment based on the value of that improvement. So yeah, that does trigger it. Is that what you did, Sam?
Yes, it is.
Right.
Yeah, it shouldn't have been huge, but whatever you turned in, that's how they reassess. Yeah, and that's how they pay for, I guess, the streets not having potholes.
Thank you.
Sam, do you have potholes in your street? That's the big question.
I do still.
Ooh. You need to write some letters, man. We need to write some letters. Okay. Well, that's good. Dude, that was a great information on tax. And who brought that up? I don't remember. It was between Sonia and Eileen. That was good. I like that. Any other questions right now before we keep moving on real estate?
I have a question, Alex. So I know Sonia has kind of mentioned it twice about credit score and buying homes.
Yeah.
Can you talk a little bit about what kind of credit scores people are looking for, or some tips to maybe people who need to work on their credit scores in order to purchase a home?
Yeah. So one thing, I'm gonna let Gordon talk about this a little bit more in detail. But one thing that what's going on right now with the market, with all these changes, people losing their jobs and things going on, what the banks are looking for in terms of credit and what they need and for you to qualify for a loan changes. Now, it changes between bank, and it seems like it's getting a little bit more stringent. Now, there's two reasons why they're possibly doing that. One, to protect their own well-being, their own asset, their own money, and then two, to protect you as a purchaser. They don't want you to get into a loan that is not good for you. Now, we see that happened back in 2000, before 2008, before that whole big boom, that loans were a lot easier to get into back in those days. After the 2008 bust, we saw that the requirements for getting into a home loans, whether it's FHA or a conventional loan or whatnot, became a little bit tighter. So depending on the kind of loan that you're looking at and job and all kinds of different stuff, it really just depends. Gordon, do you want to touch a little bit more on the credit score and
Yeah, so the credit scores, and that's everybody's heard, wow, what's your FICO score? So I want to actually just make sure the myth of the higher the FICO score, the better, the richer you are. I think that the FICO score and you have a high credit score does prove that you make your payment. But every time I work with somebody, I just say, all you need is a good enough credit score to get a house. Because I always share one of the things, and I'll tell you the minimums, but one of the things is if you have a 640 credit score and you buy a house for $300,000, and another person has a 760 credit score and buys a house for 300,000, and the house goes up for $300,000. It doesn't matter what your credit score is. They both make $300,000. So there's a fallacy about wait till your credit score is super high, then go buy a house. Yeah, it helps with the interest rate, but what we have to do is think about what you're buying. And so with the credit score, they're looking right now, if you have your own money to buy a house, you could go with a credit score as low as 620. It used to be, and Alex brought it up, it used to be only 580, but ever since this COVID-19 has displaced the whole country and our financial market, it's changed things majorly as far as the liquidity of money. But go ahead, Alex.
Sorry, go ahead. Go ahead, Gordon.
No, I was just going to say that's the minimum score you'd have to have.
What score is that? Can you say that one more time?
Currently of 620.
620.
I have a question. Gordon, hi. When you were
Hello.
saying that as long as you have your own money, what do you mean by that? As in that you are employed, or that you're able to get a loan, or what do you?
Well, two things. I guess I'll clarify. In other words, if you have a savings account, right, that you've saved money, or you have a parent that would gift you money, and I'm going to talk about the FHA government insured loan. Their only requirement is that you have 3.5% of your own money, either from a gift from a parent or from your own savings account. And from there, you do have to obviously have a job, because as I say, you have to have capacity to repay it. And but that's what I mean by having your own, because there's a lot of the other way is there's a lot of what we call down payment assistance. Alex may have shared that in the past, but those have gotten they're more stringent, and they want a higher credit score, and actually they're getting harder, because if you have nothing, as it says, if you have nothing invested in the property or no skin in the game, it's easy for people to walk away.
Yeah.
I have a question. Gordon?
Yes.
Okay, hi. If you're going to buy a house between two people and one has good credit score and the other one doesn't, how does that loan happen, or that qualification?
Okay, so that's a great question, because I get it a lot. But what happens is if you know there's 3 scores, you always hear the 3 different FICO scores, credit scores. So we use the middle score, and I guess the worst part is we use the middle score of whoever has the lowest score.
That's unfair.
Hey, it's what am I gonna get? Well, choose your partner wisely, I guess. No,
I agree.
So, okay, that's good. Now we have another. Does that answer your question, Sandy?
Yeah.
You asked that question, right?
Okay. Yeah. Thank you.
Okay.
I have a question, Gordon.
Hold on. Would you hold on to that question? Let me get to Lauren, because Lauren asked a question here in the private message. Gordon, in terms of interest rates right now, how long do you think they'll stay relatively low, and what we're seeing right now?
There is that concern, but it feels like, because as you guys are probably listening to how they're going to let us all go back to work, it's like I keep hearing 3 phases. So I'm thinking this is probably going to last potentially through the end of the year, as far as the rates being down. And a lot of the people in the industry think the same thing, due to the fact that they're not just going to say, okay, everybody go back and be normal. It's not going to happen like that.
Yeah.
And wait till a lot of some of your companies, your own companies, probably that you work for, have seen major slowdown in your business, I'm sure.
Yeah.
Oh,
Yeah.
I'm sorry, Alex. I didn't mean to interrupt you.
So that's a good place to point in terms of like the interest rate. Lauren, I think we're answering your question right now. You know, a couple of years back, they were, or maybe it was last year. I can't even remember now. It's always, sometimes it seems like a cloudy, but they were trying to raise interest rates just a little bit. But from what I'm anticipating right now is I think that they're going to keep them a bit low. For one reason why is right now we don't know for sure if we're in a recession. However, we think that we probably are just because of all the job losses and the slowing down of the economy. So, you know, with the interest rates low, you know, they want people spending money. It'll stimulate the economy. So if we do get back in the next 2 years, back on our feet, everyone, you know, from all the job loss and whatnot, I would predict that the interest rate will remain low, at least so that it will help stimulate the economy. Because one thing that we're seeing in the real estate market right now is that real estate is underbuilt. There's still houses that need to be built. All the houses that were predicted to be built this year are not being as built as fast. And there's still, for a sense in California, at least a housing crisis. So I think they want people to get out there and continue buying homes. If there is a recession, which I think we're probably in one right now, the numbers aren't actually right there because we're only in this about 5 weeks. I definitely believe that the interest rates will stay low. And there was another point that I was going to say.
I was going to actually ask too, with from what I've heard, and these loans that are being delayed, say they get 3 months like of a deferment, but that they do have to pay that deferment back right away after the 3 months. Do you feel that there's going to be kind of another bit of a 2008 housing crash where all these people are going to have to owe this money and they're not going to be able to afford it? And there might be another thing of a lot of foreclosures and homes for sale? Or do you feel that, I know they're trying to pass a lot of stimulus bills and all of this stuff, but I just was curious because it kind of just made me think of 2008 when everything was for sale, everything foreclosed, and you kind of had the opportunity to really get something for cheaper.
Yeah. Well, was that question directed at Gordon, to myself?
Anyone can answer. It's not directed at anybody.
You know, my take on this is, now, Gordon, I mean, I'd love to hear from you as well. My take on this is that the market that we're experiencing now today is very different than what we were experiencing back in 2008. Let me show you guys a quick screen right now. Can you guys see my screen?
Yes.
Okay. Do you see this? You see this graph right here? Everything in the red and everything everything in the green. Now this from 2000 to 2005. That's the property increase. That's how much the houses were gaining in value every year between 2000 and 2005, right before the crash. I mean, it was crazy. It was astronomically. Prices were going up so fast, so high. It was super unhealthy. I remember we were making bids on houses, and there would be 13 bids, 20 bids on one home. And people had money. They were selling their houses from LA. They're coming out here, and they were overbidding 20, 30,000. The home would not appraise at that time, so people would just dump cash into the house, and now the property value just went up because, you know, they bought the house. They put the extra money in for that for it to close at a higher price. What we're looking at here between 2014 and 2019, what we're seeing right now. Can you guys still see the green? Okay. That the property value has not gone up like it did back in that time. So we see that over the last 6 years, it's actually been really steady. You see the highest marker that we have here is in 2017, and that's also the lowest marker in 2001. So what I've been noticing is that the property value is doing something really steadily. People have made money over the last, since 08 or whatever, since they bought their house. But on top of that, people have a lot more equity in their house today than they did back in those days, back in 2008. Does that make sense?
Mm-hmm.
So right now, people are, there's, what is it? The statistics says here that of all homes in America have at least 50% equity. So that's $177,000 in equity that they have basically in the bank and tied up in their home. That's their money if they were to sell the house. Does that make sense?
Yeah.
I don't think that we're going to experience the same thing that we did in 08. And the reason being is that people they're not capping out on their equity. one of the biggest things that you saw going into 2008 is people were refinancing their homes. They were using their money as a piggy bank. It's something Gordon and I talk about all the time, is the fact that people use their home as a piggy bank. And I think I get tempted to do that. There are a lot of people get tempted to do that, to buy boats and things that aren't, making them money or whatnot. And then all of a sudden, the market started going down and they had no equity in the house to sell the home. They may have bought a few other properties at the top of the market. Those properties were going down. There's no equity. So next thing you know, people with no equity, what do? They walk away from homes. I knew a lot of people that just walked away from homes for foreclosure. So we saw that. I don't predict it's going to happen again, but that's my take on it. Gordon, what do you think?
Yeah, there's a couple ways.
I don't think it's going to quite happen like that. You probably will see it, but I don't think it's going to be as crazy. I don't think we're going to have a housing crisis is what I'm trying to say. People have too much equity in their home right now that they developed over the last few years.
Well, I think if the question is, will you be able to buy a house lower in the future? I'm not sure if that's really what the question is. I mean, I think that Alex would answer that, but I think, Alex, you were right about, I looked at that graph, an interesting graph, because I remember people back then, whoever were able to buy a house, and you never had to prove your income, and they were going to give you a house with zero money down. So all of those types of loans, ever since 2000, that crash, they're pretty much disappeared. Interestingly, it's a great parallel. There were a lot of companies that were taking higher risk loans. Basically, if you had a lot of equity, but your credit score is only 550, they're giving loans out. And it sounds high to do today at 6.75%. You know what's interesting? All of those companies right now, all of their warehouse lines or credit lines have dried up. There's no investors. Matter of fact, they shut down so fast. A lot of people that were trying to buy a house couldn't even buy it under those terms. So they kind of regulated it, as I say, got rid of it. So I think though that, Alex, would you agree? You think houses will be more negotiable in the near future?
Possibly. What we're looking at right now is that we're going to do a V curve in terms of like what we're projecting. I have everything on my website. I think I've emailed most of you in terms of like the recent statistics that we've seen from Goldman Sachs and things like that. A lot of people are predicting that we're going to do like a V-shaped curve in this coming recession, where it's going to drop dramatic. It's going to drop deep. Some people are predicting that unemployment might reach up to 20%, but then automatically come right back up again, just like a V. Some are saying a U, but we're going to have to wait that out and see. In terms of price, what we're noticing right now is that I got this information for you right now, actually. Let me just show you this graph real quick, if you don't mind. Give me a quick second. All right. Sorry. Share screen. All right, can you guys see my screen? Oops. Can you guys see my screen?
Yes.
Okay, so we're looking right now. This is a statistic that just came out from the National Association of Realtors. You can find this on my website, alexortizrealestate.com/news. The topic is today's home buyers want lower prices, sellers disagree. This is just a few days. This is the 16th of this month. So it says here that 43% of buyers expect lower prices, but 72% of sellers have not lowered their prices. So we're looking at people are, essentially losing their jobs, but there's still a lot of people who are interested in purchasing and writing multiple offers on homes. So it looks like things are staying pretty stable. There might be a little drop in property, but I don't think it's going to be as dramatic as we saw after 2008. That's what I'm predicting. Going into this year, we saw that the property all over the United States were going to go up in about 5% in price just this year alone. The only thing that stopped that was COVID-19. If it wasn't for COVID-19, we wouldn't be experiencing that. This is just an outside. What do you call it? An outside effect on the market. It wasn't due to anything like anything else. This is very comparable to something like hold on, I have another graph for you guys. I'll tell you right now. this is very basically where we're at is very comparable to things like the .com right after the .com boom in 9/11, where people were really afraid to go outside and there was a little drop. But outside of that, it just went right back up and prices were remaining steady. So that's what I see. I don't think prices are going to get too low, but we'll see. I mean, right now there's so many different factors into play on the economy and how people are going to react to going back to work. There's fear involved. There's 3 things that I wrote down today, actually. Oh, sure. It says here. Oh, can you guys see the screen still or no?
No.
Okay. It says here, there's 3 things that are really going to basically affect what we're going to see in terms of like how it's going to affect, pricing and economics. It's business science, health science, and social science. Just basically how people are going to react to the economy, how the health is going to be because of COVID-19, and then basically social sciences, how our business is going to fully open up and be operational after this whole pandemic ends or quiets down. So that's basically what I see in terms of pricing. I do want to go back real quick to Lauren's question. Lauren said, do we expect the interest rates to stay this low? I'm going to say yes, at least for the next 2-3 years. Gordon, what do you think? Yes or no?
Well, that might be a little too far pushed out, but
okay, 2 years. I'm going to say 2 years.
But I see them staying low. I can't predict for sure, but a year out. But I think there's something that's interesting. If I always try to tell you, as far as buying the property, I mean, sometimes if you think, oh, I'll wait for the interest rate to be the lowest, a lot of people did that, and what happened is not the interest rates were high. They're lower now, but the price of the house is much higher than it was just 3 years ago or 2 years ago. And so you win, you get the advantage of when you buy a house. If the interest rate's a little higher, I'm going to say higher, 4.25. We have quite a few customers last year, Alex. Their interest rates were in the middle 4s, low 4s, and but their price of their home today is worth more money. So,
well, one thing too is if we see that the interest rates are going up, what that's going to do also, I mean, it's going to prevent people from moving forward and potentially has the problem to bring prices down a little bit.
Can I ask a question? Everybody could, kind of say, here's a sentiment that they keep an index. It's called consumer index. And the sentiment is, how confident are you in all of your situations about about going out and spending money? So they track that. So if I was to ask you a question, are all of you, what is your What was that? That's a new song.
That was aliens right there.
Aliens. Who said aliens right there? That's right. That's good. Okay. Did you ask a question?
What was the question? I'm sorry.
Well, I'm just wondering how on your consumer confidence about spending money. Would you rate yourself high right now, or you think it's going to go down? It's going down as this progresses.
I think I'm saving a lot more since a lot of places are closed. However, I have turned more towards like the online purchasing. So meeting with Alex, like it did make me question and think like I am terrible at managing my money, right? Like I am single, I don't own a home, I don't have kids, I make I make okay money, I'm gonna spend it. And so to answer your question, at least personally, I am terrible at at managing it. But partnering with Alex and just hearing like, wait, I could one day own a home. Okay, I need to start saving. I need to stop cutting, I need to start cutting in different areas of the big pot.
Yeah. Yeah. And that's a hard part, I think, sometimes it's fun to go out. Let's just be honest, everyone. Who doesn't like to go out? But let me answer this other question. Lauren, I'm so sorry. I think you're still there. She said real quick, for first-time home buyers, how accurate are the prices on sites like Zillow to determine the value of a home? As a realtor, I just want to say that I really hate Zillow. And so I just want to say I think it's clickbait. That's how I take it. And I think once you once you, I always say this: if you're interested in purchasing a home or anything, talk to someone like Gordon. If you work with me, you don't have to use Gordon. Gordon is the number one guy I recommend because I really trust him. He tells the truth. He helped a friend the other day talking about refinance their home and try to help them consolidate their loans and get them out of debt. And one of the things that she told me, she said, Gordon looked at him, and Gordon, I'm sorry to toot your horn, but I really appreciate you. He's looking at me, he said, if you come back to me in 5 years and you have the same problem, I don't want to hear it. And that right there, to me, I love that because no one else is going to tell you that. And that's how you get, repeated business, because you can trust Gordon as an advisor, a financial advisor in a sense. So talk to Gordon first. Then when you get with a realtor usually puts you on their website so you can actually see the prices, and you can actually see if they're if a home price is actually more accurate than what you see on Zillow. Now, if the home is actually listed for sale, like I have homes that I'm representing the seller, that's usually what I'm posting is an accurate description of what the market is telling us. But if you just click on Zillow and they, put a random home on, they're giving you, the number could be astronomically high or it could be super low. So for me, I tend to see Zillow as a clickbait, especially with things like they try to hook people in with foreclosures and pre-foreclosures and things like that. And one of the things that I've noticed working with buyers is that they're looking for, everybody's looking for a deal, right? People have watched shows like the HGTV? Yeah, right? And they're looking, House Hunters and all this thing. It's a fun show. I've been on one of those reality shows, and I'm going to tell you, it's all staged. That stuff takes a lot of capital, and it takes a lot of time to go and find those properties. But then they send me a list of homes. They say, hey, we found these houses for auction or for foreclosure. Can you look them up? And I tell them the same thing. I'm going to look them up. Just be prepared that this might be misinformation just to get you to click or pay for some more stuff that Zillow has to offer. I pull title and I look at title and see where they're at, and I could see how many times the person's like refinanced the house. I could see if the house has been in foreclosure. And sometimes these houses that you see have been in foreclosure like 7 times. The thing is that the owner of that house is actually caught up on the property. They rescind all that crap. And so, yet what they're looking at is a foreclosure that was done in 2014. But I see once I pull and actually look at the title of the home, I could see that they've caught up with payments. They've actually gone into foreclosure a couple of other times and then paid it back. Does that make sense? Am I explaining that correctly? So I think Zillow is a bit inaccurate. That's just my take on it. That's how I feel. I think that if you're interested in being a first-time home buyer, connect with someone like Gordon, see your purchase power is. Even if you're not ready to buy right now, have your realtor set you up on their program, and then you can actually look and see real-time homes that are for sale, that might be short sale, that might be at auction, and you can get a better glimpse of what the market is doing. And the realtor I had a client call me yesterday and say, hey, what's the median sales price in Corona? So I typed in the information and I was able to give them the median sales price in Corona for a house that they're looking for. So I hope that answered your question, Lauren. Those are my thoughts on it. I'm just very careful with Zillow. So does anyone else have a question?
I have a couple comments.
Yeah, please.
For those of you who are hoping to or will probably inherit your parents' homes, correct me, Gordon, if I'm wrong, but I really think it's important that they have a will and a trust, because the house gets put into the trust and the will says where the house goes. Otherwise, like I knew someone with 5 kids, and if he passed away, then the house would have gone to probate, which means the government's involved and you have to deal with the county or whoever, and it costs a lot of money, or it may cost money, and it takes a lot of time. So anybody with a home really needs to have a will and a trust, even if you're younger, because you never know what can happen to you. And if you do get a home, my feeling is if it's your home, to pay it off as soon as you can, or at least add a little more to the payments if you can. And if you have a really good, steady job, or married and the two of you have a good, strong, steady job, I would say go for it, because there's a lot out there to choose from. And you want to not get maybe if you can do a fixer-upper, get a fixer-upper, and then down the road you can sell it, fix it up nicely, but don't get into a really horrible neighborhood or a really inconsistent one where there's some really, really nice homes and some really, really horrible homes, because it can be hard to get your money out of that. But that's something that your realtor and your financial person can discuss with you.
Yeah.
And the last thing, somebody asked about appraisal fee if you refinance. The things may have changed since I bought homes. They were only for myself, not for as rentals, but I shopped around and I refinanced a couple times where there was no financing, no points and no fees whatsoever, not even an appraisal, nothing. So I just got to refinance. It was just the percent times, the lower amount that I borrowed. I had to pay maybe a little higher for 10 year instead of a 30 year to refinance maybe after, 15 or 20 years. But if you have a couple good jobs, I would say this is a really good time to buy something.
Eileen, I love everything that you said. No, there's no except. Everything is changing. I think, and my desire is just to be. This is the way I saw it when I got back into real estate. I said, you know what? Usually a home can sell itself. Now, sometimes, obviously, you have to help people, figure out their thoughts, because it just happens. There's two things that I think that are very scary for people. Number one, getting married. Okay.
Yeah.
Most of you know that I used to do a ton of weddings for people. And I'll tell you what, people stress out when they're planning weddings. Lauren, Christian, I don't know if that applies to you, but I know for the majority of people that I've seen, they're planning their weddings and they freak out, and then they get to the wedding and then all of a sudden it's actually just goes really smooth, and they're just like, oh my God, it just went by, and they can't even think about it. Or it's as if they weren't even there. Second time is buying their first home. People stressing out and doing all this stuff. My point was, what was my point? I think I just lost my. No, I didn't. My point is, I think that if you can get it clearly, and my desire is to be that person, to be an advisor, not necessarily just sell you on the fact that you should buy your first home. You should buy it, like Gordon said in the beginning, start having the mindset of buying real property, because it is an investment for the future. It may be a home that you just live in. Like Eileen said, she's bought 4 homes, correct?
Yeah.
And you've lived in them and you've made money off them, and you probably bought your next house.
Right.
My thinking also is this. I mean, once you start getting pre-qualified for loans and you start creating options for yourself, and that's the biggest thing that I want people to understand, is that you create options for yourself. The biggest thing that I regret when I was younger is not buying more homes in places like Northern San Bernardino, Cal State San Bernardino. I was making enough money to do that, but I was too afraid. And I should have just taken the risk and bought a little property. I should have bought another rental property by the University of Redlands. I should have bought more property and moved there if I needed to, and then rent it out in a few years. Because my thinking is this: if I can help my friends and family buy property, even if it's just one, maybe it's their first home, they buy their first home, and then they're saying, hey, Alex, we're getting ready to move in 5 years. Well, great. In 5 years, let's reassess, because what can happen in 5 years, you're probably making more money. Okay. That the value of that home has gone up. And so now you have options. You can either rent that house out, and it could be your rental property, and then you can buy another one, or B, you can sell that house and buy your next home, like Eileen talked about. My thinking is, if you can find a good starter home, maybe not the craziest area, but you're comfortable, 5-7 years, I'm pretty sure you're going to be making more money. I would do my best to try to keep that house as a rental, because in the next 15-20 years, that house can possibly be paid off, and that's another $400,000 in the bank that someone else paid for you. And if the property goes up, you're making more money on top of that. Does that make sense? You know what I'm saying?
Yeah.
So I'm hoping that
when I bought this house, I wish I'd had the money, which I didn't, to buy 5 or 6 houses, because they're now, $600,000, $500,000, $600,000 homes, and they were only 120 or something back then.
Yeah, and things are always relative. I think we're talking about interest rates earlier. When we bought our first home, I think I mentioned in the beginning, our interest rate was about, I think 6 to 8%, and it was so we were like, oh my God, it's so cheap. Now I think our interest rate's like 3%, and our home has doubled in worth since the time we lived here. And so I want that for my friends, and I want that for my family, for them to create options. Either they're going to buy their first home to live in and stay in for whatever, or they're going to buy their first home as a potential investment that 5-7 years down the line, they didn't pay someone else's rent, but now they could rent that house out and buy another house, because they're probably going to be making more money by then. That's my take on it. You know what I mean? So I hope to be that was always my desire to get back in real estate, is to be a trusted advisor. Because I look, I think I shared that when my mom passed away, she just left some jewelry and some what do you call it? So a couple $100 in cash, right? And luckily, my sister and I made the move to buy our first and second home, and it's gone up in price. If God forbid something does happen, she's taken care of, or I'm taken care of. You know what I mean? And I hope the same thing for all my friends and family. Like, an inheritance is really important. I think that's the way I see it, because last year Gordon helped me with this two transactions where the grandparents passed away, and they had 7 brothers and sisters, 7 kids. And they had a bunch of property that they bought over the years. And when they passed away, each sibling got about almost $200,000 in the bank. I'm looking at bank statements, people that, some of the siblings didn't know what to do with the money. Thank God they called me, because we helped them reinvest that money. And now, selling a home is not as liquidable as, some other things. So now the parents bought a bunch of houses. When they passed away, that was the inheritance. They passed it on to their kids. Some of these other kids passed it on to their kids, the grandkids, and now the great grandkids are living in the houses because they're reaping the benefits of this inheritance of owning a home. One thing I noticed today is that people are trying to make money like on things like Stash. Have you guys heard of that app? It's a place where people can do trading, invest in the stock market, right? Those are great investments if you have time to really look at it and research that stuff. But I have to be honest, like in the time that I've owned the house, there's basically minimal things that you have to do to maintain it, to keep it together, and then watch the property go up, and then watch you pay the principal down. And at the end of the day, you have money, and it's like you're paying money into your own bank account. Does that make sense? That's the way I see it. Anyways, hold on. I got another question here. For buying a first home, pros versus cons on purchasing a new build. Townhomes, condos versus older homes. Okay, so new homes sometimes, and Gordon, I know you can help me on this one. New homes sometimes tend to have something called the Melrose tax. Usually, right, Gordon?
Yeah, that's what they do. So have Melrose tax, and that's to keep the price of the home down. But it does put the parks and the different things around the area. So your property. It's a form of property tax. Mm-hmm. So the payment could be much higher than you think.
Yeah. So that's the only thing about in terms of like buying a new house. I think new houses are nice. They're good. Depending on the older house, I mean, you can get in a good deal, fix it up yourself, and basically make it new, make it a brand new house. There's so many houses right now that are super old, but then you walk inside and you're like, oh my God, they're completely, they're completely remodeled. You're like, oh my God, everything's modern. In fact, you know what? I have a friend of mine I helped him with one transaction in Claremont. Okay. And he just left. Oh, okay. A year ago, he called me up. I went over, maybe a little bit over a year now. He called me up. We went over and looked at this beat up. It wasn't a beat up house, but it was an older house. No remodeling, nothing. Totally took and remodeled it. And now it's completely modern. I mean, the property value just basically doubled with all the stuff that he's done in it. So I think there's pros and cons. It's just basically what you want to do. I mean, newer homes, I mean, you're moving ready. If you want the upgrades tend to be a bit more expensive if you're buying a brand new home. So if you want the new backsplash, this one's, instead of it being 6 inches, this one's 12 inches high, and it has this kind of granite in the back. You're getting charged so much for the upgrades that are coming with the house. It's almost better that you just buy the shell and do the upgrades yourself if you're going to do a brand new home. At least that's my take from helping clients buying.
One of the other things I think that you need to even recognize, though, if a new home is what you want, Alex, many of the developers and builders, they're cooperating with real estate agents.
Yeah.
And so I'll just share that back. So if you're looking for an existing home and you see a new build construction, Alex could actually, represent you through that process, which is which is good to have somebody on your side.
Yeah, we did that last year. I had a client that was going back and forth between a new build or sticking into the current area that he's at. And it took some time, but he realized that he wanted to stay in the area where he's at. And honestly, it really was about location for him. So he bought an older home, did some of the remodels himself or themselves, the family did, and called it good. But yeah, I'm able to help you guys if you want to get into a new house. Just got to walk in there with you the first time and go in. So that's about it. Sam says stash. Where's that? Where you keep your drugs? I think we're doing good, but any other questions, any other concerns on like what's going on with the market, anything I haven't addressed?
Alex, real quick, the one thing that was so amazing was what do I need to like even qualify for a home?
Okay.
What documents do I need to have? What is it that I need to do?
Okay, so what I tend to do is I send everybody an email on what they do. So, but let me show you this. Do a little screen share. You guys ready for this?
Sure.
My guy, Gordon Cooper, okay? If you go to my website, you go to loans, and you will see Gordon's information right here. Preferred
Look
loan.
at Gordon.
Look at him.
Oh, a tie.
Now I have
No.
other people on there to give them options, but at the end of the day, Gordon's my number one guy, and I tell people to go to Gordon, and this is why. They fill out they get all the information. Usually I email him, but he'll ask you to gather all the paperwork and whatnot, and you just get pre-qualified for a loan. Okay. I'll let him talk a little bit more about that. But the reason I like to have my clients do this first is because I know if you start looking for a house and you don't have all the pre-qualifications done to get a home loan, and especially do something called a direct underwriter approval, like it's more than just an approval letter. Your offer basically has no chances of getting accepted. And I say that because as a listing agent, someone who represents the seller, if someone comes and writes an offer for the home that seller that I'm representing, and I don't see all the paperwork in terms of their pre-qualification, their DU, direct underwriter approval, copy of the proof of funds for if they're doing a down payment, things like that, I won't even look at it. I'll just tell them rejected. I write rejected and I send it back to them because they haven't given me a full offer. So the first thing you need to do to see where you're at is talk to Gordon. I can send you the email. Gordon can send you the email of the paperwork that he needs in order to run through all the information, and then you can assess what your purchase power is. And then you could say, okay, we can qualify for $600,000, but we don't like the payments at $600,000. Why don't we drop down to $400,000? Be a little bit more reasonable. Be a little bit more practical with what we're purchasing, because I think practical is a lot better for your first home than getting the big house, you know what I'm saying, or the huge home. So that's what I would recommend first, is to talk to Gordon, get all your information in there. You can go to the website or just go to the website, fill it in, or I can email you and start the process there. Because here's the thing, if it's not the right time for you to buy a house today, once again, you're creating options for yourself once you get all that information in, so you can assess where am I at. And if you're not there, then Gordon will tell you what you need to get there, because sometimes people don't have the best credit score. You know what I mean? And they're not ready to buy, or their debt to income ratio might be too high. You know what I mean? But without running all the numbers and seeing, what's going on and what they're comfortable with, you'll never know if you can really qualify for. And on top of that, if it's not the right time right now, usually Gordon, from my experience working with him, he usually tells my clients, you need to do this, and this. Now it's up to the client to actually do the work that Gordon has given them to do. Does that make sense? Sonia, does that answer your question?
Yes, it does. Thank you.
Gordon, what do you have to say on that?
By the
way, Gordon, we need to get you some like nice lights back there. What's going on?
Yeah, I just went there to turn them on. They didn't work. So, hey, I'm still here though. Hey, I just want to say there's four things that I like. I call it the 4 C's. This is something always to keep in mind. Those of you who have bought a house, maybe you weren't shared it, but this is what you did. The 4 C's are, we're going to look at credit. So we always look at credit. So it's not just your credit score being high. It is how much debt do you have. So carrying less debt will help you qualify for more house. Don't go buy, I have a little joke on there. Don't go, if you're in the process of wanting to buy a house, don't go out and buy a new car unless you plan on living in it. living in it. Okay, so a little joke, but credit is one thing that we look at. We talked about scores. The next thing I want to talk about, we always talk about, is your capacity to repay. So we look at your job and how much money you're making. That determines what your affordability is. Sometimes there's a reality check for some people. The reality check is, gosh, you need to go make more money somewhere else. You probably need to do it. Some people don't know that, and so that is determined on your capacity to repay. And that capacity to repay is the same thing as when you rent a house or you buy a house. I always tell people, if you don't pay your rent, what happens? Anybody answer? What do they boot you out, right? Well, it's kind of the same thing. If you don't pay your mortgage, it's the same thing. So, you might as well own something and pay for yourself. So capacity to repay. The third thing is your cash, your assets, cash. We have different, sometimes low down payment, but you do need to have some cash, to buy a house, unless you're a veteran. If you're a veteran, thank you for your service. If you're a veteran, we can do it with zero down, but most of the time you need some cash. So that's the four C's. Then the fourth C is collateral. Collateral is where Alex comes in. He always talks about, the condos. So I mean collateral in a sense. I could do condominiums, fourplexes, manufactured homes. One thing I can't do is mobile homes, and I typically don't recommend a mobile home. They go down in value. But those are the four C's that if you keep in that mind, Sonia, and you focus on having cash, keeping your credit low, not your credit score, but how much you have to pay everybody for your cars, your credit cards, then you have a big chance of getting into a house.
Does that include student loans as well?
Yeah, student loans. But here's an interesting thing about student loans, and you'll find this interesting, that we will use the payments on there. So if you're on an income type of payment, I've seen a pharmacist, her payments were $2 or $5. Some of you may have heard of this. She had just come out, and so her payments hadn't changed from the income level, but she was making $70 an hour. So we were able to help her get into a nice house because those payments were low. So we do evaluate that as long as they have a payment.
Okay.
Awesome. Okay, I have another. Sonia, how do you feel? Did he answer your question?
Yes, he did. Thank you, Gordon.
Okay, cool. I have another question here. This is a great question, actually. Lauren Scotty wrote this. He says she wants to know the pros and cons between an for FHA and having a lower interest rate, but also having PMI versus a conventional loan with mortgage insurance.
The pros and cons. Well, okay. It's just mostly the mortgage insurance. The conventional loan, mortgage insurance can drop off in the future if you don't ever change your loan. Okay. So it's a lower cost. The FHA loan does stay on there forever, but the big difference too is this: FHA is more lenient. They're more lenient, and FHA means it's a government insured loan. Okay, first of all, so they're more lenient. They will allow you to. They're more forgiving when you have medical charge-offs and different things. They'll accept a lower credit score. So I've seen people who couldn't buy conventional take the FHA loan, and in the future, their house went up $100,000, and instead of waiting until they can get a conventional loan. Does that help you out?
She's
muted.
Yeah, she's muted. She's just answering right here. So
yeah, that helps. Thank you.
Okay. One thing about the FHA loan, like you were saying, they're okay. So you're going to be paying, Gordon, correct me if I'm wrong. You pay a little bit more on your interest, correct?
Well, the interest rates are actually very competitive, low.
Yeah.
On FHA.
All right. So they're very competitive. So there's a PMI question here. So my thing is that sometimes people don't have PMI. So right now, let's say in this area, your average home, probably the median price is probably about $475 to buying a house in this area. You know, a standard first-time home buyer house, you probably get a little bit lower, but on average, $475. If you want to get a conventional loan, you can still get in with what, 3.5%? 3.5%.
Well, the conventional loans have as little as 3% down, and they do carry that dreaded thing we heard of called PMI. But I think of PMI, mortgage insurance, as just a tool to help you get into a property instead of having to wait to save 20% for a down payment.
Because at that point, if you're going to save 20%, if you're saving 20% to buy your first home and it's like $475, that's $95,000 that you'd have to come up with. On top of that, if you're not living somewhere else, nice to chat with you all. Thank you. Good night, Christina. Love you, future Mrs. Ortiz over there. Not, you know.
Good night, you guys. Thanks for the great information.
Let's see here. Sorry, guys. Okay, so real quick. So yeah, it 95,000 on your average house just around this area, you're looking at $95,000. If you're paying rent on top of that, and your rent is going up, or sorry, you're paying what? Let's say $1,800 in rent, depending on where you're living over the span of that's $21,000 that you're going to be spending in 1 year on your average rent, I think, in the area. So you're going to be trying to save $95,000 plus paying your monthly rent, unless you're able to live with your parents. So PMI is good to drop it down, but just remember you can also drop it down later once you refinance and do some other things. The good thing about FHA loans is it gets your foot in the door. You can even go conventional now with the PMI and get your foot in the door, and later on drop it down, drop it off, and lower your payments. That's a good thing about owning a house and just getting in. You can purchase now at whatever rate, and then 6 months down the line, refinance if you're in a better spot, or a few years later, refinance or keep refinancing. I have a friend right now, I think he's refinanced his house. He just bought it maybe 2-3 years ago, and he's probably, I think 2 years ago, he's probably refinanced the house probably 3-4 times in that span, and kept dropping his payments down. Unfortunately, hopefully he can take off the PMI. So I hope that answers your question. Let's see here. Pros of FHA, conventional loan. So yeah, that's basically it. I mean, unless you got the 20% down to put down, you'll still have a PMI, correct, Gordon? Unless you have 20% down, you're still gonna have PMI, which is
yeah, that's a general rule of thumb. That is just a tool, and it's, you know, you have to look at it as it's just a tool to help you get into that property. And, you know, I can say it, probably a lot of people can say they didn't start with 20% and their house went up just as much money.
Yeah. So I think that's about it. Anybody else have any other questions? So I think we're wrapping up here. Everybody's got to go. It's already been an hour, a little bit over an hour. So anybody have any other questions before we take off? Oh, for Sam and Eileen, if you haven't done so already, you can connect with Gordon. Maybe drop your payments, refinance. I don't know. Been helping a lot of friends right now, and
I don't have any payments.
oh shoot! Come on. That's where I want to be. Yes.
Good job, Eileen.
That's right.
Thank you. Well, it took a long time, but those of you like Lauren, don't forget you don't have to offer asking price. You can offer less, and your inspection, if you have a good inspector, should calm any of your fears about a house, because you can always back out of it if there's things that they find that you don't want to deal with, you know. So you're not like, you don't have to do it. Lauren? I gotta go. Thank you, everybody.
All right. Take care. Bye, Eileen. I think that's pretty much Lauren and Scotty. I think Sonia said she might have taken off already. Lauren, did we answer your question okay? You good? Sam, you got any questions? Here to help.
I finally figured out my light.
Well, you look good. All right. I think that we're good. So thanks, guys, for sticking tuned. I think I email everybody. I try to keep everybody up to date, but spread the word. I think we're going to be all right. I don't think the housing market's going to crash like it did in '08. That's just my prediction from what I've been reading. All that information that I have is on my website. I try to post it as much as I can, at least 4 times a week, with what's going on in the market, housing prices. And if you need something more specific, tailored to what you're looking for, let me know. If you want to talk to Gordon in terms of getting just a simple pre-qual. There's no obligation and you're good to go. So, all right, everyone. Love you. Thanks.
Bye. Nice greeting you.
Thanks, Gordon.
You're welcome.
All right. Sonia, you still there? All right. It's well done.